Hello, ETF fans. Mike here with another video insight. Today's going to be kind of a mix of a category spotlight plus a portfolio visualizer. But really, I want to dive into kind of a hot topic these days, the debasement trade, right? And essentially, what is the debasement trade? It's just the idea that the supply of money is growing because of governments putting more money into circulation. As a result, purchasing power of that money decreases in terms of relative to the supply of goods, aka inflation, and that's been playing out throughout the market now. For pretty much good part of the year, and we've seen a lot of ETF categories that would be beneficiaries of this do really well this year. Whether that's gold and silver, commodities. Within that commodity section, infrastructure stocks, some utilities, some areas of the market in our kind of more niche pockets of the ETF market have exploded. But, there's a lot of different ways to play this and be confusing. So I wanted to kind of focus in on the area of the market called, which we classify in our multi-asset asset class called real asset income. And so real assets are an opportunity to really kind of play multiple areas of a trade that will do well if this debasement story continues to play out, rather than having to go in and pick multiple different niche areas and combine them. You can have a manager or a strategy that's capturing a lot of those together. So first, I'll just kind of start by hopping into our member access platform. What I want to do is hop into our navigator tool. I'm just going to set a couple of quick filters to dial into this area of the market. So I'm going to my filter section here on the right of the data table. Going to set a quick filter on asset class. And I'm going to go multi-asset. And I'll hit apply. Composite, I'm going to go specialty, AA specialty, so asset allocation specialty. And then within asset allocation specialty, there's three categories: alternative asset sleeve, which I won't get into today, multi-asset income, and real assets. Now, there is some overlap with these two, but the big difference being is multi-asset income specifically targets an income as part of their overall structure, where real assets, the real goal, and what we're going to focus on today, is all about capturing real assets. So less about income, more about the asset class itself. It can come with a nice income as a side effect, but the primary strategy is real assets. So now I've got those set. Let's just take a quick look at this, right? It's a pretty small category. It's 29 funds in total. I'll get rid of asset class. 29 funds in total. The majority of it is in the multi-asset income, 25 funds, 4.8 billion, and then much smaller amount in this real asset. These four ETFs we look across here have 1.3, little about 1.4 billion in AUM. But if I slide across here and look at some of my data, year-to-date returns, 21%. Astoria real asset ETF leading the category year-to-date, up a impressive 28%. I'm going to dive into that a little bit more here in a second, but just kind of keep looking at this category. It's pretty small, but year-to-date flows have been impressive. 608 million has come into this category. So we've seen more than a doubling from the start of the year assets relative to this category, right? If I hit apply on my charts tool here, take a look at this, we can see these categories have done pretty well year to date, right? Nice growth rate there. And then flows have been pretty consistent, with just starting to see some outflows this month for the first time. But prior to that, every month this year has been positive. So what I want to do is I want to dive in specifically to these real asset ETFs. So I'm just going to click this hyperlink, asset allocation specialty real assets. It's going to load up those four ETFs in my database. I want to take a look at a few things, kind of get to understand these portfolios a little bit. So let's start just looking, kind of, we talked about performance. We'll take a quick look here. You can see these four categories. One of them, the SMI 314, is relatively new, so it doesn't have a full year-to-date track record. But, the State Street, kind of the oldest in the category here, RLY, up a very nice 15%. Van Eck real assets up 21.5%. And then, as I mentioned, PPI from Astoria is up a very impressive 28% year-to-date. Been a little bit of a sellout this last month as gold and silver have come down. Some of these more infrastructure stocks have pulled back a little bit, but still very impressive and holding up relatively strong on this recent sell-off. Now, let's kind of look what's going inside of these. So I just changed my data tab to asset class exposure. We are now switching from classification to look through analytics. So we're going to see what these funds hold. And I can tell you, if you look at this equity holdings, Astoria's got 67 stocks that it holds. RAA has 153. RAAX and RLY are purely fund of funds. So they're showing up purely as other holdings. RAA and PPI both have some funds in it as well, which we'll explore a little bit. But just wanted to point out that's a holding concept there. And then a breakdown, some pretty good equity exposure in all these portfolios. Broadly diversified, U.S., international. All of them have fixed income allocations with the exception of Astoria. It does not. And then what I really want to point out is this other category. You're going to see this 14, 23, 5, 6. This is look-through analytics. So when you're doing look-through analytics, it's looking at your equity, your stock positions, your bond positions. But if you hold things like Bitcoin or gold futures or gold ETFs that are physically held, those are not going to show up as a stock or a bond. And on a look-through analysis, they get bucketed into others. So if you see that on our database, you'll know to go look deeper to see what that other is contributing to that other. One other thing I might look at here, given the size of equity exposure, might just hop in real quick and look at my sector breakdowns. And you're going to see across these portfolios some decent allocation to energy, industrials, materials, real estate. So those more utilities, the real asset side of the economy. If these weren't multi-asset strategies, they would likely get classified as infrastructure or potentially natural resources, depending on how their strategy is designed, but they would fit into that thematic equity category. So that's a broad understanding of the category. And again, remember, kind of looking at this in the sense that, hey, a lot of these real asset trades are doing well, but is there a way for me to capture all of it in one trade? And that's what this category would be all about looking at. So maybe just top things off. Let's take a kind of a portfolio visualizer look at Astoria real assets. It's up 27% year to date. So if I click on PPI, I can go into their website. And one of the reasons I'm looking at this, by the way, just as I'm talking, I read a great piece that Astoria put out recently about the debasement trade. I'll throw a link to that piece in this in the summary of this video insight if you want to take a look at and read that in full. But let's just take a look, right? First thing, if we look at performance year to date, everything's always tied to a beta tracker. State Street is the longest time horizon in this category. So it's beta tracker. Obviously, PPI has done very well, especially recently relative to that beta tracker in the category. Go into that composition tab. We can see that U.S. equity, international equity, and that other bucket. And that's kind of what I want to focus on. What is that other? So let's hop into that holdings section here. What we're going to find is that Astoria is getting some allocation into gold miners through the lower cost GLDM ETF, so physically held gold ETF. It also looks like they're getting some exposure to Bitcoin. So primarily they're owning those infrastructure stocks, but they're clearly layering in some other real asset opportunities through that structure. Now, one of the benefits, of course, from doing this all inside of one ETF versus doing it yourself would be that tax efficiency. They're able to, as they want to rebalance it all within the constructs of the ETF, use custom, create redeems, all that good stuff to keep it more tax efficient. But that's generally where we're at. And then, of course, if I wanted to really focus in on that visualization of their portfolio, this is just going to be the stock portion. So it's the equity stock visualizer tool. But just kind of take a look. You can see they have 67 stocks, make up 84% of the portfolio, that other 16% being in the gold allocation, that Bitcoin allocation. And if I look, just kind of take a look, how have these stocks done year to date? It's pretty impressive, right? We see those industrial stocks all have done incredibly well. Utilities, materials, energy, mostly green in here. There's a little bit of tech plays, different types of Bitcoin miners, it looks like. Bitcoin type exposure, gold miners kind of popping up throughout in this portfolio. But, interesting way to maybe think about that overall debasement or inflation hedge in your portfolio rather than building it yourself. There are a few ETFs with a nice track record out there in terms of doing it for you. They get the benefit of being able to potentially, make changes in the portfolio as they see fit in a tax efficient manner. And rather than you having to decide what specifically will be your inflation hedge using more niche products, you can look broadly and have one manager or one strategy capture that for you. That was the idea of my portfolio insight today. I hope you enjoyed it. If you have questions, reach out to Team ETF Action. It is Friday, November 7th. So have a great weekend, everybody, and thanks for watching.